What's going on, everybody? It's Jeff here. Welcome back to the channel. Happy Sunday. Less than 24 hours till the market opens, which if you watched my video yesterday talking all about the excitement, hype, and momentum, you should be excited for every single day the market is open and the stock that we love so much. First and foremost, happy Father's Day to all the proud papas out there. I hope you are truly enjoying your day. Guys, in this video, I want to talk about an amendment that was recently published that talks about the 002 rule filing. If you've been following this channel, following AMC stock for a while, that you should be very familiar with this. If you are unfamiliar with this, I will break it down very simply for you. But I also want to talk about what this amendment, what it means for us in both a positive catalyst and if there's any negative catalyst. I will go over that in this video, guys. So stick around. You're not going to want to miss this. Let's get rocking, guys. So as you have seen before, I'm hopefully, like I said, if you haven't, if you're new to this, then just follow along. This is the DTCC.com website. Talks about all of their SEC rule filings. 801 was approved and put into effect May 4th. And the 002 rule was set to be, I believe it was May 7th was the date for approval. However, there was a 45-day extension on this, and just recently, just a couple days ago, they had made that amendment. Okay, but if you are unfamiliar with this, in very short terms, basically a lot of people had said that it was supposed to provide an automated margin call, which means if a bank requires a certain percentage of collateral, there wasn't a way to kind of have them, have basically a backdoor deal to turn a blind eye. It would take the human element out of the picture, which is good because as you guys know, even if you're new to this, you can clearly understand and see, okay, the type of manipulation that goes on between many parties involved. This would prevent that, which was very good news for us. Also, it would shorten the time frame, okay, on when they would be able to meet these collaterals, and it wouldn't look at it over a longer period of time. It would be on a day-to-day basis, which is absolutely awesome. Now, like I said, guys, this was the 45-day extension, and that's where we're coming up with the June 21 date. Now, let's take a look at exactly what this amendment says. So this is, first of all, basically they're replacing a couple, a text on a couple different pages into this, from what it was into what is now bold and underlined right here. As described in greater detail below, NSCC adopted the SLD requirements in 2013 to establish supplemental liquidity deposits to the clearing fund designed to ensure that the NSCC has adequate liquidity resources to meet its liquidity needs during monthly options expiry settlement periods. Okay, as you can see, that monthly, this was supposed to be changing it to daily. There was also a 90-day holding period for the SLD. That is going to be eliminated. Okay, you can follow through and read this. It's calculating and collecting when applicable. Same thing, member activity is increased, I believe, from 10K to 250K, which is awesome. You can go through this filing, all right? You can literally type in, NSCC 2021-002 amendment and read all of it. I'm just gonna highlight some of this. Therefore, NSCC is proposing to enhance its management of the liquidity risks that arise in or are borne by calculating and collecting when applicable SLD on each business day, rather than only in advance options expiration activity periods. Okay, so that's good for us. And the reason being is because instead of looking at it over a 30-day rolling period, they're looking at it on a day-by-day period. It also means that I believe it is 8 o'clock every single morning, all right, on the Eastern Standard Time Zone. They are going to take a look at exactly where each institution stands, and by 8:30 they will issue saying, listen, you need to raise liquidity. Okay, which is similar to a margin call. I want to preface this, guys, that there are, just because a margin call happens doesn't mean liquidation happens. That's kind of like an end result. If you guys have been following me for a little while, you remember probably a few weeks ago, I actually got a margin call with my Merrill Lynch account, which is weird because Merrill Lynch and Bank of America are one of the same, and I have numerous other accounts with Bank of America, and the amount that my margin call was for, I had more than that in the Bank of America accounts. I didn't have to liquidate any of my positions. I just simply had to transfer money over. However, if I did have a lot on margin, if I was over leveraged, like if I did have a short position, okay, where your losses are infinite, then potentially what is inevitably going to happen is you will run out of liquidity, which then after you run out of liquidity, the next step, the only step, the last step, okay, is to sell off your securities, which inevitably is exactly what we are waiting for. So this is all good news to us. If this is another brief overview of what the supplemental liquidity deposits are. Okay, the corporation requires sufficient liquidity to enable it to effect the settlement of its payment obligations as a central counterparty. The two principal sources of liquidity for the corporation currently are deposits to the clearing fund and a committed line of credit. They are really keeping an eye on exactly what is going on. So this is going to be ruled upon, it's supposed to be ruled upon by June 21st. They've already done their extension period, okay? From everything that I've read, they're not allowed to take another extension. They made this brief amendment, okay, which will still require the liquidity requirements to be much higher than what they were, and it is going to be heavily monitored to where as soon as a position, okay, as a fund becomes over leveraged, they're immediately going to crack down on it. The reason being is, yes, guys, it is to prevent some of this manipulation. But also, you need to think about some of the hedge funds that literally have gone wild with other people's money. All right. And I'm talking other people's money, like teachers' pension funds and retirement plans, where you just happen to trust that you put your money in there. And when you get older, it's going to be, there for you. You have no idea what a hedge fund is doing behind the scenes. And however, if they go under, well, that's when other parties, whether it's insurance companies, the government, has to step in and start to try to fund some of these because it's not fair to the individual. So this is not only good for us as holders of AMC stock, this is also good and great, I would say, for the everyday average person who works really hard and has a certain percentage of their paycheck taken out, or a certain amount of money of their paycheck every week taken out, put into the 401k, for their future. Okay, so guys, that's it for this video. Stay rocking, stay excited for Monday. I'll see you in the next one.